everyone. Welcome to Pit Stops To Podium, the RevPartners podcast, where we talk to execs who compete and won, taking their companies from high growth to high scale. My name is Brendan Tollison. I serve as the co-founder and CEO of RevPartners, and I'm delighted to have with me today Ratan Manehani for this episode of Pit Stops To Podium. Welcome, Ratan.
Hi, how are you?
I'm doing well, and for those that may not know who you are, Ratan, this is a great opportunity. So Ratan serves as a partner at Fort Ross Ventures. Ratan, what we love to do is just give you an opportunity to share a little bit about who Fort Ross Ventures is and how you got to Fort Ross.
Yeah, happy to do it. Well, thanks for having me. Fort Ross is a fairly new venture fund. We started in 2013, and today we have 3 funds under management, roughly $600 million. And our primary focus is on growth stage companies. So Series B through pre-IPO in SaaS, cloud, cyber, in addition to fintech, which we have some expertise in as well. But I'll mainly highlight a lot of the SaaS topics today. In terms of how I got there, I have a very unique background when you look at it. Not a traditional venture investor, not a traditional technologist, but I've been involved in a multitude of businesses in a variety of roles. And what brought me, to Fort Ross was those experiences that I had in the past. I was assisting large corporations on innovation, working within tech companies and helping them scale them. And then also as a private equity investor. And one day I woke up and I said, I want to be a venture investor. And found my path to Fort Ross and, just as they were launching Fund 2. And it's been a wonderful, wonderful experience. And I've really enjoyed being on the venture side versus all the other roles I've been in.
That's great. Well, I appreciate you sharing a little bit about the origin story. It's always fascinating to hear how people got to the seat they're in now. We'll talk a little bit more about kind of, what you've experienced at Fort Ross as it relates to assessing deals and supporting portfolio companies. But before we do that, we do have a tradition here at Pit Stops To Podium, and that's to get to know our guests outside of work, because we're human beings, not human doers. And so what are a few fun facts that our audience should know about you outside of work?
Yeah, no, I'm an avid basketball player and fan. Throughout my youth and even into college, one of the big dreams I had is to be an NBA player. But at one point I stopped growing. And so that dream kind of went to the wayside. But I still love going out every weekend or playing some hoops. And I've got quite the 3-point shot. So, nothing like Steph Curry's, but pretty good at the end of the day. So that's something unique about me and my competitive nature, even in work, comes from my roots in basketball.
Safe to assume you are a Warriors fan, given you live in the Bay Area and had a Steph Curry shout-out?
Yeah, a reformed Warriors fan. Originally, I was a Houston Rockets fan, but, with all this winning going on, I definitely joined the bandwagon.
Well, you had the mid-'90s for the Rockets, so there was a good little run there with, what was it, Hakeem Olajuwon and Kenny Smith and Robert Horry, those guys?
Yeah, Hakeem and Clyde are the ones that brought me into basketball early on, and great run there. Hopefully they'll rise again. Yeah,
it's been a little bit of a dark spell the last few years. I guess they had it going for a while, but now they're kind of in the cellar these days. Well, let's transition into the big idea. And so one of the things we talked about, just in terms of your investment firm, ultimately who you invest in from a thesis perspective, I think you have a unique lens as it relates to what to be looking for from a company. And let's talk a little about the pillars of success for disruptive tech companies. So you'd mentioned Series B to pre-IPO, and so there's a lot of just learnings that you've gathered in that period of time. And so let's start, when we talk about pillars of success, how would you define what those pillars are? Let's put some descriptive words around those pillars.
Yeah. So, by the time a company is at the Series B phase, and these definitions of Series B are broad. They can be 3 million in revenue, can be upwards of 10 million in revenue. But the key pillars that we look for are, a fabulous team, a wonderful market that is developed or defined by that stage. Product market fit is clear now. Meaning you've launched the MVP, you've iterated it, you've obviously got customers paying for it. Now, how is that going to expand as you function and get into the scaling function? And so my point at Series B is, what is that scaling function and how is it going to scale? And there's many iterations around that scaling function. Some companies, will focus purely on the core market they're at. Some will say, I want to expand their market. Some will say, I want to expand their product. And so for us, it's to assess what is the right stage that they're at and where they're going to go. And so for me, the core function is, you've got good revenue, you've got a good product, you've got a good team. Now, what way are you going to grow? And for me, what I like to see is companies focusing on, at least in this market today, is on true fundamental growth. In the last couple of years, we have focused on purely year-over-year growth without focusing on economics, sales efficiency, all these key components that are becoming more and more important. And so I've always had that lens because of my background, not being in venture purely, but looking at it from a true operating sense. And so when I'm looking at businesses, do you have good business econ? Do you have the right sales efficiency? Are you building the right team and in the right structure? Do you have the right folks in the right role? And if those things line up, then I think hyperscale or the scaling functions are going to play out really well. And so that's what's really important to me when I'm looking at a deal versus just looking at the product and the team. It kind of all comes together.
Yeah, it seems, to your point about like Series B, it's no longer an idea. Like, there is traction, and so there's that product market fit, to your point. And then it gets into like what's the path for like sustainable growth. And so that seems like that's been that trend of going from scalable to sustainable, like growth at all costs, to how do we do more with less. And so when you talk a little bit about, you mentioned some of the things around like sales efficiency, but let's double click on that whole concept of like the business model, the unit economics. Like, what are those benchmarks that our team or our audience should be aware of when you think of things like, like CAC, Rule of 40, whatever those models are that you are tracking? I think it'd be helpful for our audience, because I know that there's a heightened emphasis on that in this current economic landscape.
Yeah, so maybe we'll start in the kind of business economics area. Gross margin is becoming extremely important, particularly in the SaaS segment, and it's been distorted. Fundamentally, we've been seeing all businesses should be trending towards that 80% gross margin rate, but there has been some distortion with new technologies. Utilizing AI and compute power that usually brings it down, but there's opportunity for efficiency with scale. And so it's trying to find that balance. And as an investor, looking at it and saying, is this the true state of the gross margin, or are we going to see some additional efficiency either via scale or even via cost savings? And so we're all trying to trend toward that 80%. Sometimes that march happens overnight. Sometimes that march takes a couple of years. But as investors, we want to see a baseline of at least 60% marching towards that 80%. And so I think that's extremely important when evaluating a SaaS business, because that gross margin tells how much money you can spend efficiently and effectively on sales and marketing. And R&D and other components. And if you don't have that strong gross margin, you're going to be out in the marketplace raising capital in these 12 months, 18-month cycles, which we obviously saw in the last couple of years. And so we're now moving and shifting the model to say, having a strong gross margin will relate to you to effectively run your business. And then maybe growth suffers because you were in a different market frame, but at least you had the capital to spend on that without going back to the market, every 12 months. On the sales efficiency side, one of the things that wasn't a problem a couple of years ago is now becoming a problem. Top of the funnel was not a problem. And the reason top of the funnel was not a problem is because they could hire as many salespeople as they wanted. They can spend as much money as they want. You had inside sales folks. Everyone was running on full blast. In addition, companies were very receptive to purchasing technology because they had ample budgets to do it. So we were all living in this kind of Goldilocks scenario where sales just seemed very easy for organizations as long as you had a very decent piece of technology that could meet a customer demand. And those times have changed now, right? Where budgets are tighter today. You're getting top of the funnels becoming ever so hard, even more harder. And then you're also finding that just throwing bodies at the problem is not going to work. And so now you're really having to focus on who is your ideal customer profile and really understanding that and really double clicking it versus trying to just boil the ocean. And so what we're really trying to focus on today, and from a net new sales perspective, do you really have an ICP versus just going after any and every customer? Because efficiency and time spent on your ICP is going to be bring you the most dollars in through the door in an efficient manner versus just spending it in every way. And so one of the things I'm looking at is, do you have your ICP? Do you have the right sales leaders? Do you have the right supporting staff present? And from a metrics perspective, we're looking for close rates from start of engagement to close to be greater than 25% in a market like today. If you're not at greater than 24 or 5%, you're not going to have the efficient growth that you want, and we're going to see growth rates go into those 10s and 20s versus the 30s, 40s, and 50s. Top quartile companies with great product market fit, I think, are going to see higher close rates. But I think in this trending period that we're going towards, we're going to go back to the kind of the mean of kind of that 15, 20, 25% close rates. And so those are the big things I'm looking for in this new market is, what is your close rate? How are things moving in the funnel? Another thing I'm really being cognizant is around time to close. So we were seeing sales cycles, in the enterprise space still being in that kind of 6 to 8, 12 months in some instances is very hard technologies. We're starting to see signals where those are moving now 12 months and greater back again. Again, this goes back to where the market is shifting, and customers are not ready to buy, or they're delaying. Obviously looking at CAC, and one of the things that we're seeing right now is, a couple of years back, we were focused on getting a land and expand strategy where you wanted to decrease your sales cycle by getting a low land and then expanding over the next 6, 12, 18 months. And I think that strategy still lives today. But I do think that land is going to see longer periods of time for expansion because, again, the budgets are going to be constrained. And if your product is a must-have, I think you're going to get a big land versus a small land versus, people are playing with a lot of different technology tools. And so these expansion periods, I think, are going to get longer, or there may be technologies or companies where they may not even get a small land. So there's going to be some nuance and nature based upon the type of technology and the value that you're offering your customers. And so I think we're going to see some disparity against time in terms of sale. I think CAC, was very, very high previously. I think we're going to continually see it be high. But I do think if you have your ICP right, your ideal customer profile right, and you're targeting the right customers, you actually might see efficiency in CAC. And I think CAC to LTV has been talked about a lot. For me, there's many ways to jigger CAC to LTV. You can increasing your contract periods. You can, make it more frothy than others. So I tend to stay away from that. And I look at more of post-customer engagement and retention to kind of determine what the right CAC to LTV is versus what the company is putting out there. But those are the types of things that I'm focusing on in this market as I look at sales efficiency.
Yeah, super helpful. I think, that there are really kind of two ways to impact the flywheel. And when you think about what you're describing, the old world was you can increase force or decrease friction. And so the whole force concept is what you talked about. The old world is just apply more people. And sales felt easy because it didn't really matter what the efficiency looked like. It was just naturally, if you have more people, you're going to generate more opportunities. It may not be efficient, but it's more opportunities. And now you're seeing that, hey, how do we decrease friction? And that's where the efficiency gains start to come into place, whether that's technology, whether that's process. But you mentioned things around like the conversion rates. And so hey, how do we get the gross margin in that 60 to 80%? How do we get those conversion rates at minimum that 25% range, ultimately getting higher? But that comes into that, how do we drive that efficiency piece? And on the time to close, it was interesting, depending on when this podcast goes out, but Tomas, who you might follow on social, just even talking about the data suggesting, I think it's about 25% increase on time to close. And it's because of what you were just describing. I mean, there are a lot of reasons, but with economic conditions the way they are, decisions are being delayed. And so that makes a lot of sense in terms of where you're putting the priorities. Let's talk a little bit kind of as we wrap up, getting into whether, post-product market fit from a scale perspective. You started talking a little bit as it related to maybe it's the land and expand strategy, but how does the product piece fit into once you have market fit?
One of the things that is great for my stage versus some of the earlier stages, I have a tremendous amount of data that I can look at, a number of use cases and stories that customers tell us. And so as a part of our evaluation process, we always do customer reference calls. We always do market reference calls. And so one of the things I'm really looking for from just a qualitative perspective is from the customers, how much they love the product and how much value they gain from it. And so I try to get those qualitative things and try to tie them into the quantitative factors. And that quantitative factors are how much usage is it? How much has the account grown over a period of time? How much is their propensity to pay in terms of, other customers in there? And so those are kind of early signs. How much has the account churned? And those types of things, number of seats and so on, that they've increased or not. So those types of things really tell me that they really love the product that is being really used by the market. And so those give me a good base hold on how the market is receiving this product. Because at the end of the day, companies and founders can make wonderful product that, maybe just gets used not a tremendous amount, but they're still paying for it. But getting that value is one big thing. Second thing is really trying to see where is the product today and the needs that are being met by the customers, and where is the product going to go? And that takes a little bit of, everyone always asks, why do venture capitalists really care about the market that much? It's a product business. Well, we need to step back and take a look at the market and see who are the incumbents in the space, who are the different players in the space, and what is their product and what are the end needs that they're meeting. And so that gives me a directional view of today. They may be just serving one sliver or one sub-process, and they're creating so much joy from the customer. These are the other tangential areas of markets that they can go into, the tangential product areas they can go into. And then secondarily, what are the additional segments that they can go into? And so particularly in SaaS, you rarely find a customer that out of the bank goes straight to enterprise. Usually there's a curve that they go through. They start with small businesses, then they usually go to mid-market, and then if they really find true market fit, they go into the enterprise. And so you want to see that curve or the path that they're on. And today they may only have a set of features that fit the SMB market. And do they have the horsepower and need and market demand to go up market? And so there are a couple of companies in my portfolio that I looked at when we invested. They were purely mid-market focused. And as they build features and products, now that they are focused on the enterprise. And so that's one of the things you kind of have to look through the looking glass and say, can they get there? And then the last component around scaling is just really, really digging deep into, the core metrics that are going to drive the business. So you want to really look at retention. So if your NRR is just slightly over, just say 120%, and your growth is modest, you can still double the business in a fairly quick period of time. And so those types of metrics become really, really important versus just looking at top line. And so those are some of the metrics that I really get into and looking at what is your net retention, what's your churn, what's your NRR like, and that really starts feeding my model to say, okay, this business can double in every couple of years, even with modest growth. And if we continue to have stronger growth, this business can be 5x in a number of years. So those are the types of things that I start looking at.
I love that. Yeah, I think when you're talking through the natural progression of a software company, well, I think just to take a step back, actually, the idea of the product is that it really kind of is twofold. One, it helps as it relates to customer health. That usage gives you a clear indication of, are they seeing value, and are they going to retain, to your point, hey, from whether it's a lifetime value with net revenue retention or just the churn in the short term. But also where you're going is, hey, how's it inform the product roadmap? And so what are the things that the people are using, and how does that allow us to continue to expand and grow? And I was thinking about, as you were talking, I used to be in the software development ecosystem, and Atlassian it certainly comes to mind, where they had like point solutions, and we were talking to other, like the rallies of the world at the time, which is part of CA and like version 1, and just kind of dismissing them, saying that it's really just for teams. It's an SMB product, and Atlassian ate their lunch and is now the dominant tool in that ecosystem. But you're so right. It was a product-led growth motion, and yes, they have they have somewhat of a sales team. But the point is, the product is the hero, and that's really what informs the strategy in terms of industry, but also their ability to move up market.
That's right.
Well, let's as we wrap up, Ratan, this has been a lot of information and really educational, but as we think through a next step that our audience could take if they want to learn more about you, the firm, what's the next step they can take?
Yeah, if you're a scaling growth stage company, mainly Series B and later in the enterprise SaaS space, I would love to talk to you. Can email me at ratan@fortross.vc. And find me on LinkedIn, and happy to engage not only from an investment perspective, but also from an insights perspective. I'm a true lover of scaling companies and love having conversations with folks. So that I would advise an email me or find me on LinkedIn.
All right, Ratan, well, really appreciate you stopping by. I know our audience is going to benefit from this because I really enjoyed the conversation. So if they don't, I did. But thanks again for stopping by. Really appreciate it, and have a great day.